What's going on, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. This is the show that I do Monday through Friday right here on YouTube. We use technical analysis to help us get a good idea as to where the stock market might be headed next. In today's video, we're going to be looking at some indices, indicators, commodities, the dollar, yields, and then I'm going to wrap it up with a conclusion of kind of my overall thought process right now going into the election, obviously, and then also just some longer term concerns that I have. I'm also going to add in some charts of individual commodities in the material sector that I've been watching and I'm keeping an eye out for because they're looking pretty bullish, and I think there's going to be a lot of opportunity there. Let's go ahead and hop into today's episode. All right, welcome back. If you haven't done so already, smash that like button. It's always appreciated. Thank you for all those recent subscribers coming into my channel and signing up for my newsletter. I haven't sent anything out with the newsletter yet, but I do plan on creating some unique content. So if you haven't done that, you can go to my website, figuringout.money. That's going to be in the description. Enough about me. We're going to go ahead and look at the S&P 500 on the daily time frame. Really what I want to point out here, it's still trading within this channel. We had a big gap up today. We actually suspected that to happen into the election because of the fact of some of the indicators we went about yesterday looked like they were overextended to one direction, which made me think that, hey, we're going to see a big run up into the election. What's going to happen next? Well, it's really up to discretionary belief at this particular point in time. We have a lot of resistance up ahead of us, and we're creating some new gaps on the way up, which we've done previously. And we already know what happens when we get a lot of gaps and fast movement to the upside. They typically get filled eventually. So right here, we had the gap up today, moved pretty much higher, 1.78% up. Nice day. This day right over here, we also had that gap. Now we're still trading within this overall channel. This could be a double bottom, this could be a double top. I would just say we're kind of going sideways until we get some clarity. Now, what do I personally think that can happen? Well, I think that there's still room to run up into this previous gap above us. And we're going to have some overhead resistance like the 50 period and the 20 period. But the bulls did overtake the 5 EMA and started working themselves up higher today. So remember, we have a lot of stuff that could potentially happen and a lot of uncertainty. So we got to keep that in the back of our mind and be prepared for, what can potentially come from it. There's no certainty in the markets. A lot of comments that I get, they're all kind of just around certainty. Like, well, you said this and you changed your mind. It's like, in order to be a good trader, in order to be a good investor, you need to be able to move and change your mind at a moment's notice. So keep that in the back of your head. I'm going to look at the 30-minute time frame. Yesterday we talked about, what did we talk about? Well, we talked about this inverse head and shoulders potential. And then we said, yeah, there's like some resistance up ahead. And if it breaks that resistance, we can go clear this gap right here, fill the gap, sorry. And we also mentioned like sometimes the market, especially the cash market during the day, doesn't want to test these areas of resistance. So what happens? Well, the overnight market just gaps above it or gaps below it. So look at what happened. I mean, you can't make this up. We gapped up overnight, boom, through the neckline, and then we went in to close that gap, getting hung up right where we said we were. Then it kind of formed this kind of bull flag and then moved higher. Nice inverted hammer candle, got rejected towards the last 30 minutes of the day. Overall, I mean, this could still have room to go. You never know what happens overnight. Like I said, good news can happen, or the market can perceive it as good news, and then we gap above this horizontal line again and go. As of right this particular point in time, the RSI is not oversold. The MACD is kind of crossing over, but it's still above zero. This is just more of it's just kissing the signal line here. So, it hasn't fully crossed over, but it potentially can. So we got to watch out for the break below this kind of low right here to potentially head lower and fill this gap. If we fill this gap, we'll probably find a little bit of support. You got to keep an eye on that 50 period moving average, sloping up within it too as well. Here's the NASDAQ 100. You got this gap above us. This gap right above us is also by the 50 period and the 20 period moving average. It just overall moved today. It has to swim a lot higher. Yes, the indicators showed us that we're going to have some sort of a, move into the election. And we did. We got some follow through, but there's still a lot of resistance above us. So you're going to have a select crowd of people buying into this hype and momentum, which could very well push us higher. But keep in mind, this can all result into what I said yesterday, a potential just dead cat bounce overall. And then very well head lower. Or, the market could perceive whatever happens as good news and we significantly head higher. I mean, you could form this as, if we take this high to this lower high, put a trend line there, and this low to this higher low, it could be somewhat of a symmetrical triangle forming and coiling right now at this particular point in time. So we got to just be very agile when we're surrounded by just all these air pockets and gaps. Here is the Dow Jones. The Dow Jones, you can call this potentially an island reversal pattern. We pulled down obviously significantly here, had a hammer candle, and now we're starting to just really bounce and move like gap, huge day, gap, huge day. Just so you understand, a 554 point day in the Dow Jones, this isn't supposed to be typical, but lately it has been very typical to see these big swings. But if you just look out through history, these type of days, 2% moves and even bigger on certain days like this and this where you see these huge swings, that's not normal behavior for the markets by any means. So yeah, we're getting this big run up to the upside, but it's creating a lot of air pockets. Like I said, that's happened in the past, right? And we already know what happened. They got filled. So yes, this looks like it still has some legs to potentially run, but we have the 50 period, the 20 period, and a gap right above us. What am I thinking? Well, I'm potentially thinking this could be a potentially good area to short depending on what our sentiment and breadth indicators are telling us at that particular point in time. So no decisions have been made for me as of right now. Here is the IWN, the Russell 2000. Very clear island reversal pattern here. You had this gap down, now you have a gap above. Just this pattern hanging out right here, just, chilling. And then we're just stuck. The price is stuck between this air pocket above us and this air pocket below us. Clearly, the market doesn't know what to do. In the after hours, we got pushed down here. And then in the other after hours, just recently, we got lifted up over here. Now, what I want to call out again was this was a horizontal area that we drew out the other day with this gap. And we said, if the cash market doesn't want to go and test it, it'll just gap over it overnight or, gap potentially under. And that's exactly what took place. So, what can you do about this? Not much. So you got to just, like I said, wait until all this kind of uncertainty dies down a little bit to really get a good sense as to where the market really wants to start getting some momentum and traction at. What I like to do is wait for extremes in the market and then play to those extremes. Now, typically with the contrarian point of view, when everything is so bullish, I typically like to start looking for areas of resistance to get a little bit more bearish. MACD down here is still above zero and it's curling over, so that's a good sign right there for the bulls. The RSI looks strong too, so overall, like the island reversal, it looks strong. Potentially has some more legs to run above the 20 period moving average, getting pretty extended from the 5 EMA, and we're above the 50. So the bulls have control of this Russell 2000. But like I said, remember, things can happen in a blink of an eye, especially with what's going on right now. So got to be careful still. We'll wake up tomorrow morning and see kind of what's going on. Here is the KRX, this is the KBW Regional Bank. I just wanted to point out, and I'll get into the yields here shortly just to show you, but clearly we've just been on this monster run. I wanted to draw out this ascending triangle. We're running into an area of resistance right now. Clearly it was a gap down through this, resistance, 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 gapped above, so clearly there's some history here. Pulled down, just landed on it, and then gap down, resistance, resistance. So clearly a lot of resistance. So this is at a very important key level. I'll tell you what, if yields keep going up, that's good for the banks. And the yields have been going up, and we came down at this lower portion of the trend line, and we started moving higher. What's this little pattern right here? That's an inverse head and shoulders. We're sitting at the neckline of that inverse head and shoulders. Maybe the banks are catching a bid. Maybe we go higher. I don't know how or how that's possible. The only difference between the breakout here previously, which was in June, it was below the 200 period moving average. We're right now above the 200 period moving average, kind of creating a couple gaps on the way up though. Now, it's something to consider, something to watch. I don't know how high it'd potentially go. I'd imagine that at 87, around that level, we would have some more resistance if we start breaking out. RSI is moving into that overbought territory, another thing to consider. And the MACD is nicely trending up. This right here, there is a small gap between this day right there. So this was an island reversal type pattern right here. And then we started moving higher. So, island reversal patterns, we got out of this kind of just lower trend line right here that we've been kind of watching. And then we gap back into it, and now we're kind of just ping-ponging around. So it's going to be interesting to see how this plays out, but it looks like it's getting prepared to make some sort of a move. Let's take a look at the indicators really quick. Here is the BPNDX, oversold still, 29.98, or just overextended, I guess you can say. What does that mean? Well, that means that the market still has potential to move higher. That means some very, stock market bulls can just head in and see this and be like, okay, yeah, it's still got room to go. We had this little double bottom, found out support, and yeah, we can take it a little bit higher. It's totally possible. Another thing that makes me believe that is the breadth indicator. The breadth indicator, we hit this double bottom, and now we're seeing a positive breadth in the market, 8.19. Interesting. We've been talking about this one for a while. You look back at 2018 when we had that high, all-time high on a negative breadth, similar to here. Then we kind of came down. We came back up on a positive breadth, went back down on a quick, sharp negative breadth, and then we pounced higher on a positive breadth. What do we see going on here? Down, up, down. Now we're heading up on a positive breadth. The only difference and thing that we had to consider is what happened over here is we saw some huge negative breadth to the downside, and that's when it really took the market lower. And like I said, when I get to my conclusion and my kind of overall concerns, then we'll talk more about this. Now, interestingly enough, this is happening around the same time, just in different years. So, 2018 heading into, November, December, we're right there also November to December. So got the double bottom right here on the negative breadth. We're seeing the move higher. Maybe we get back up to 3,400, 3,450 on a positive, nice breath, and then we see another sharp decline sell-off into the end of the year. Is it possible? It's possible, and it doesn't mean it's probable, but it's just something that we need to be prepared for. Here's the VIX. The VIX took a little bit of a breather today. That makes sense. I mean, it was getting pretty overextended over here for a couple of days. Formed a nice little hammer candle, closed below this neckline. This neckline could technically be, moved down a little bit or up a little bit. So there's room here for interpretation. We still have a gap below us and have found a little bit of support right at that gap. So yeah, it's very possible that this little hammer candle forms and we can start moving higher. It's still, up for interpretation. You could read this in a couple different ways right now. So there's really no clarity like I had yesterday on that short-term bullish move into the election, or basically today. Let's take a quick look at commodities, and I'm going to show you some individual gold and silver charts as well, but I'll quickly go over them because I plan on making a weekly scan video of the stock setups that I plan on trading. But here's gold. Gold's looking strong, coming into this upper trend line right here, right by the 50-period moving average. Hey, maybe we can start breaking out and start really seeing a good move to the upside. I'll play a breakout of this. I wouldn't mind playing it as far as the gold miners go, but I would prefer to buy more physical gold down in these levels. But like I said, we need to see some volume, and we need to see just a solid hold above these levels. I originally wanted it above 1950, but the way this is forming up, it might be a good break above 1920 as long as we can hold that level. So overall, looks very strong, but you need to be patient. You need to wait for confirmation. If you don't wait for confirmation, you can easily get caught on a move to the downside, especially when we have all this market uncertainty. Then you take a look at, these are weekly timeframes for, I would say, 300 million plus market cap gold stocks, and there's quite a few of them. But as you can see, this is from highest volume to lowest volume. Just take a look at these charts. They've been on this big run up, and then they've been consolidating for multiple weeks. Now, like I said, each candle here represents a week of data. So here's gold. I think that's Barrick. Then you got AUY, nice consolidation. This one actually kind of seems like it's starting to break out of this previous consolidation, which could be good if it gets above 70. Same here, Helka Mining. I played this on the run up. I talked about that in one of my weekly scans quite some time ago. It was actually, back in June, July, May, January, June, July, somewhere around there. NGD, same thing. You could just look at the charts, just flag, consolidate. This is looking really good, and I want to be patient because it doesn't mean that they're just going to continue to move. We need to get some confirmation. We need to see some volume come in. So there's a couple of things that we got to make sure that takes place before just hopping into it. Here's silver. Silver's been catching a bit ever since this little hammer candle that we talked about. Still got work to do. We're coming into this area of resistance and the 50-period moving average. So, I'm not too excited as of right now. We need to see confirmation above the 50-period and above this horizontal line, and we need to make sure that it's a confirmed breakout, not just some big inverted hammer candle showing that, hey, it was a false breakout and we're going to start heading lower. As far as the silver mining companies go, this is on the weekly time frame. Like I said, these are 300 plus million market cap companies, so they're stronger, just more well-known companies versus, just some exploration, small, tiny miners that are in the OTC markets. We've got AG, FSM, PAAS, EXK, SVM, and MAG. And as you can see, the patterns are very similar here too. Just flags, just consolidations. Move down, and now it's kind of catching a little bit of a bid here too. So I want to be prepared, because if we start getting a higher move to the upside, these are going to just present, like I said, just excellent opportunities. Here's the daily time frame for Bitcoin. Look, I don't know what to expect of this kind of trend line and this trend line. I'm sure there's some sort of name for it, but this is how I'm kind of reading it. First off, we are pretty overextended. That doesn't mean that it has to come down. It can stay up here for quite some time and move a lot higher and then come down a little bit and still have, a high above 13,750. So that's a possibility. This breakout was very strong, and it's just very strong chart overall. However, it's like from here to here, it's a broadening wedge, and it just seems like as the days go by, it's just getting more and more volatile swings. And we saw a low of 13,250 all the way to where, above, where was it? A high of 14,071. So as the days are continuing to go, it's just like volatility is just picking up stronger and stronger. So I don't know, maybe it's setting up for just this monster move to the upside, or like I said, maybe we start heading down and start back testing an area of support and then head higher. Now, on the very strong stocks I can speak for, sometimes you never get a back test. Sometimes they just keep going and going. So I have my eye on it. There's a couple of people asking me when I posted my portfolio, how come you don't have any Bitcoin? Honestly, I just don't really understand it. I got to still continue to look into it, but I don't mind allocating a small portion of my portfolio here just to be a part of it, I guess. And, nothing crazy. Like I said, maybe 1 to 5%. Let's talk about the dollar. It went down, right? We had this inverted hammer that we kind of mentioned, and it fell right back below that 94 level, but it's found some support by the 50 period and the 20 period moving average. Maybe we continue to move lower and then, just play it day by day. Well, like I said, if we start breaking below 92, that's a massive area right there. Clearly, that's where it caught its kind of bid from down here. And then we have even stronger resistance up here because we had previous support. And then now it's resistance right there. So we got to wait for either a break above basically 95 or a break below 92. Till then, we're just trading sideways within this channel. Quickly, let's talk about yields. What I wanted to point out here on yields is, one, we're just continuing to see the spread increase is the 10-2. It says at 0.73. The last time it was at this level was back here in February to March of 2018. So a couple years since it's been at that level. And then what we see here is these short-term rates just compressed down to basically zero. These follow the Fed's fund rate, so that makes sense to me. Then you have the 10 period sloping up to 0.9, which is, coming into a previous area of resistance. Be interesting to see what plays out here. And then 1.66 for the 30 year. So the spread is increasing, and I'll talk a little bit more about this, about my concerns that I have here really shortly. But this could be the very reason as to why the banks are doing a lot better at this particular point in time. They borrow short term and they lend long term. So the higher the rates, the more margin that they can make. Let's talk conclusion here, my overall thoughts. So first off, I see the opportunity and I see the bull side to potentially move higher into November. So, there's a couple indicators. Obviously, the BPNDX says like it's extended to the downside, and I can see it continue to run. Now, like I said, there's still a lot of market uncertainty. Me personally, I haven't been trading the markets. I've been out because I do not want to deal with the wild swings, or, just I don't want to deal with the uncertainty. I need more clear of a picture to move my money. Now, if we start heading higher, like I said, I still believe that because we have a lot of overhead resistance, it could very well, this move could be just a dead cat bounce until further notice. If we see continued strength or, some bullish type patterns, or the indicators start coming back to reality, obviously my mind's going to change there. Now, overall, I want to talk about just some my overall concerns. And my concerns is, first off, I talked about this chart in the big picture video, and every time it seemed that we hit a yield curve of negative. Now I inverted this. I made it look just a little bit easier on the eyes. So this, when it's green right here, goes up technically below zero, but it looks like it's going above. that is an inverted yield curve, and it tells us that, it's an early economic warning sign or signal of recession. And then you see it start to steepen. When it goes down like that, that's steepening. And then when it goes up like that, it's tightening. Now, keep in mind, you're probably in reverse right now just because I inverted this just for ease of use. I don't want to get way too into this, but basically it got inverted. We started moving down, as you can see, as it steepened. We came back up as it tightened, got inverted. Boom, that was the 2008 financial crisis as it was steepening. Right here in 2019, it did get inverted, but you can't really see it just because it just barely did it. And now we're starting to steepen the yield curve again, and the market hasn't really started moving down at this particular point in time. So it's not like this huge, let's short the market and get all crazy. This could be very long term. And we also actually, just so you know, here in 1998 or a little bit after that, mid 1998, we inverted. That was right basically here, and then we just went down a little bit, and then we actually got more inverted later on. So that was the 2000 tech bubble where we kind of went down and then even higher. And you can see that actually here we got inverted. That was the March crash, COVID, right? Went down, and then we're starting to go higher, but yet we haven't inverted again. Not that, that doesn't mean anything necessarily, but we got to just keep our eye on this and be prepared for, if this chart does play out in that particular point of time. Another thing that I want to point out is just the yearly chart. Who looks at the yearly chart? I hear that often. Not too many people, but it is something to pay attention to. It's just another data point. We had this obviously just monster move throughout the years, okay? But this is an outside trading year. We traded higher than the previous year and lower than the previous year, and it's forming a hangman candle. That on a move up like this, that's not good, okay? Hangman candles like this on the move, those signal reversal type. Now, obviously, these are year. One candle equals 1 year. It could take a very long time to turn around, or it can just consolidate and could just completely ignore this. And, it could take 10, 15 years to really just see how that would play out, just to see more data points. But it is still something that we need to just take note of. It's just another data point. And then the last thing is the quarterly chart. Just a very indecision type looking quarter so far. Obviously, we still have a couple more months. It's at the top of the megaphone pattern, struggling to really make another high here. You have a quarterly trend line up above and a quarter trend line up below. We've seen this on the weekly chart. The RSI is a negative divergence as well. So, these are just a couple concerns I have. It doesn't mean that you can't make money when you get some moves to the upside or to the downside. But, I don't know. I just like to overall look at multiple data points, and where I see things right now, it just tells me to be very cautious and be prepared if we start seeing some, shaky ground take place. All right. That's all I really have for you guys today on today's market brief. I said I try to keep it short, and, per usual, I probably ran too long, but everybody have a happy and safe Tuesday, and I'll see you back here on Wednesday.